Most traders think they lose because of bad strategy, because they didn't find the right indicator, or because the market is too unpredictable. But the truth is much deeper. You don't lose because you're not smart. You lose because your brain is built to fail at trading. And unless you understand how your brain actually reacts to money, risk, fear, and uncertainty, you will keep repeating the same mistakes, no matter how many strategies you try. In this video, I'll show you the hidden psychological forces inside your brain that silently sabotage your decisions and destroy your consistency. And once you understand them, you'll finally start trading like someone who knows what they're doing, instead of someone who's fighting their own biology. Welcome to NeuroTrader. Your brain evolved for survival, not for trading. It was designed to react to danger instantly, not to stay calm while a candlestick drops 2% in 5 seconds. When you see a red candle forming, your brain doesn't see a market fluctuation. It sees a threat, a danger, a loss that feels like an attack. This is why your heart beats faster, your breathing changes, your hands get tight on the mouse or phone. Your brain is literally trying to protect you even when the chart is doing something completely normal. The truth is harsh. Your emotional brain controls your trading more than your logical brain. And until you learn to manage that emotional circuit, you'll always cut winners early, hold losers too long, and make impulsive decisions you regret seconds later. There are 3 emotions that silently control almost every losing trade you make. And the scary part, they happen automatically, without your permission. Emotion number 1, fear. Fear makes you exit winning trades too early because your brain wants to protect you from losing unrealized profits. So you lock in tiny gains and miss the big moves that were meant for you. Emotion number 2, greed. Greed makes you hold losing trades too long, hoping they will magically return to your entry. You don't close the loss because your brain hates pain more than it likes profits. This is why losing trades often become big, account-damaging losses. Emotion number 3, uncertainty. This is the silent killer. Uncertainty makes you hesitate, skip good setups, and chase bad ones out of desperation. Your brain hates not knowing what will happen next, so it tries to force control even when the market cannot be controlled. These 3 emotions make you behave irrationally, even if you know the right thing to do. And that's why psychology is more important than any indicator. Inside your brain, there is a tiny structure responsible for most of your bad trading decisions. It's called the amygdala, the fear center of your brain. When the market moves against you, the amygdala fires instantly. It floods your body with stress chemicals, tightens your muscles, and pushes you into fight, flight, or freeze mode. Here's the problem. The amygdala reacts faster than your logical brain, which means your fear response kicks in before your thinking brain even understands what's happening. That's why you exit good trades too early, enter setups too late, chase candles impulsively, close losses too slow, panic when the market spikes. It's not that you're undisciplined, it's that your brain is operating on a survival instinct that doesn't belong in trading. To become a consistently profitable trader, you don't need a different strategy. You need a different brain response. There is one psychological bias that destroys more trading accounts than bad strategies, bad market conditions, and bad risk management combined. It's called loss aversion. Loss aversion means your brain feels the pain of losing twice as strongly as it feels the pleasure of winning. This single bias explains almost every destructive habit traders have. It's why you let small losses turn into big losses. You hold losers hoping they'll come back. You move your stop loss further away. You avoid closing red trades because it hurts. You take profits too early to avoid regret. Your brain isn't trying to help you become profitable. It's trying to help you avoid pain. But in trading, avoiding pain creates even bigger pain. This is why so many traders say, "I knew what I should have done, but I still didn't do it." It's not a discipline problem, it's a brain wiring problem. And the first step to fixing it is understanding how powerful loss aversion really is. There's another powerful force controlling your trading decisions, and it's one you probably never notice. It's called dopamine, the chemical of excitement, anticipation, and reward. Every time you take a trade, every time you see a candle move fast, every time you open your trading app, your brain releases dopamine. But here's the trap. Dopamine doesn't reward profits. It rewards action. This means your brain feels good when you trade, not when you trade correctly. This is why traders overtrade, chase impulsive setups, enter without confirmations, jump into random breakouts, trade out of boredom, check charts 1,000 times a day. Your brain is literally addicted to the possibility of making money, not the reality of making smart decisions. You think you're being productive, but your brain just wants another hit of excitement. And the market punishes that every single time. To beat the market, you must stop chasing dopamine and start following your plan. Have you ever wondered why you create a trading plan and then completely ignore it the moment you enter a trade? It's because the moment you put real money at risk, your brain switches from strategy mode to survival mode. Survival mode does not care about rules. It does not care about logic. It does not care about probabilities. Survival mode cares about one thing: avoiding immediate pain. This is why you close winning trades too early, hold losing trades too long, move stop losses, cancel stop losses, add to losing positions, break every rule you created when you recall. Your brain treats a red candle like a threat to your safety. It triggers the same instinct your ancestors felt when a predator appeared. But here's the truth trading teaches you quickly. The market cannot hurt your life, but your brain reacts as if it can. Once you understand this, you stop blaming yourself and you start working with your brain instead of fighting it. If you've ever said to yourself, "I won't do that again," but then did the exact same mistake the next day, you're not alone, and you're not broken. You're stuck in something called the emotional trading loop. Here's how the loop works. Step 1. A loss creates pain. You take a bad trade, you feel frustrated, angry, disappointed. Step 2. The brain wants relief. Your brain hates emotional pain more than it hates financial loss, so it pushes you to make a quick trade to win the money back. Step 3. Impulsive trade. You enter a setup with no confirmation, weak analysis, and zero discipline. This is the revenge trade. Step 4. Another loss. The impulsive trade fails, and the pain gets even worse. Step 5. Guilt and regret. You tell yourself,
Why did I do that? I knew better. I'll stop tomorrow. But the cycle repeats because the emotional brain is still in control. This loop destroys traders not because they lack knowledge, but because they lack neural control. Break the loop, and you break your losing cycle. Here's the good news. Your brain can be rewired. You're not stuck with the same emotional responses forever. You can train your mind to stay calm, logical, and disciplined, even when the market is moving fast. But it won't happen automatically. You need a structure, a system that slowly retrains your brain to replace emotional reactions with controlled, intelligent decisions. Here are the 3 most powerful ways to start rewiring your brain. 1. Pre-trade routine. Your brain needs a signal that it's time to shift from emotional mode to analytical mode. A 2-minute breathing exercise or reviewing your plan can lower your emotional intensity before the trade even starts. 2. Trade with small size. When your size is too big, your brain panics. When your size is comfortable, your brain stays calm. Reduce size until you feel nothing while entering a trade. That's the sweet spot. 3. Post-trade reflection. A simple 1-minute journal after every trade teaches your brain to understand its mistakes instead of repeating them. Reflection rewires your neural circuits faster than anything else. You don't need to be emotionless. You just need to train your emotions to follow your rules, not the other way around.
Most traders imagine the best version of themselves as calm, disciplined, confident, and consistent. But the truth is, you don't become that trader by watching charts. You don't become that trader by finding a magic strategy. You become that trader by mastering the psychology behind every decision you make. Because trading is not a battle with the market, it's a battle with your own brain. And here's the part no one tells you. You are not fighting your weaknesses. You are training your strengths. You are building a mind that remains stable when others panic, focused when others chase, disciplined when others gamble. This is your advantage. This is what separates consistent traders from emotional traders. So the next time you're in a trade and you feel fear, greed, anger, hesitation, remember this. Your brain is not your enemy. It is your machine, and you're learning how to operate it. If you commit to working on your psychology, if you stay consistent, if you build emotional control, then you're already ahead of 90% of traders. This journey is not about perfection. It's about progress. Welcome to the new version of you. Welcome to NeuroTrader.